The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, as we're doing this, I'm making some changes here. I discussed this a little earlier. I actually did the last two segments of Tommy's show. You had to leave early. And I wanted to say, in the Chapman Wave methodology, there's a time where I use what I call a phantom peak. When I get two parallel highs, I tend to say, well, maybe if there's a little ictus, if there's a little hiccup in the technicals that I follow together at that exact same time, I treat it as a phantom peak. So I say, well, this isn't an A, but technically, if I use this particular technique with parallel highs, I can call that an A, and then I put it in red because it isn't official. And then the next real A, I call phantom B. The next real B, I call phantom C. And then the real C, I call phantom D. And that just says I'm now ready for any pullback. And if I have a position, I take a little bit off. I say, okay, just be prepared that this could be your final top in this particular, in this case, a 10-minute E-mini chart. And just be prepared. Don't get everything. Don't get excited because all the technicals are still very good. It's just that you've got that phantom P that says maybe you're going to be waiting for a D, but actually it's already at a D, and therefore you could be wasting your time and you'll see a very sharp drop. So this is what I'm doing here. But what's already been, what's unfolded is in the 5-minute chart, I've got a peak F. It says be careful, and an alternate count in the 1-minute chart of G/C. So this is what I like to do. I do this for the stocks as well, for subscribers. If there's a hint of something that says be a little bit cautious, we'll either raise a stop or take a little bit off and just allow the pattern to unfold very naturally, just being rather cautious at that moment. Yellow light for a moment. Okay, it looks to me like from the base of the 5-minute chart with the 9-period moving average so far above the 14 that this is going to go higher. That's the way I'm looking at it. And the same thing with the 10-minute chart. All right, so here we go. Let's go to our, we've just done the update. Now we've got the show starting, the Tiger Technicians Hour. Let's do this. We've got the Dow holding really well. It did a nice test of this rising diagonal trend line, and it got repelled. It got repelled after the turn from the low of last Monday. On the Tuesday, it went right to that level, got repelled. The next day, went right to that level, fraction higher. How does it know to go fractionally higher? Just impossible how these things work. And then it pulled back, close to the low of the day. Then on this was on, so that's Monday, Tuesday, Wednesday. On Thursday, on the 4th, on the 8th, it goes where? To 39,508, slightly above, and then closes right on the line. Yesterday that was Friday. And yesterday was Monday. What is it? It goes right to the line and pulls back. Today goes right to the line, goes above it. It's actually started a leg B right here. Not very strong, but it is a leg B. Still a gray B. Why is it gray? Because I haven't got anything to give me a buy signal. As soon as I get the buy signal and then it's upgraded to a buy mode, I can go to I can go to blue. Right now, it's gray. And I'm going to change that because I need to. All right, that's gray. And what I am going to do is I'm going to go back there just for the moment so I don't forget. And it says, what am I going to do? I'm going to make the so I'm just going to make that. All right, there it is. Got it. Okay, so what we've got is within the context of the Dow, it's up 75, but it's really struggling. And until that 9-period moving average goes positive, now I must say we are long, but as soon as we need to see the pink 9-period moving average, it's going to take a while or a tremendous rise in price. In other words, we have to get to 39,900 to 34,100, and then you'll maybe see the pink 9-period moving average turn green. That's a big ask. We haven't got that yet. Let's go to the S&P. S&P right now, nice action, holding 40 points higher at 53.84. This is now a new leg B as well, but this is a nice leg B. Peak A made a fractional lower high. That became A, and now it's still gray leg B, making it gray. Why? Because the MACD hasn't turned positive. The 90 is way under the 14. The stochastic's only at 45%. On balance, volume is quite good. Relative strength right there, the little gray line, is improving, and that's a good sign. Okay, let's go to, and the weekly charts are still all very good. QQQ. The weekly chart of the Qs are, it's very close to turning pink, but it hasn't. Very nice single leg A going from the low. I should have typed that in. Right there, the low of 420, 23.45 on the 5th of August for 23.45. Okay, 423.2585. All right, this is a very nice move to the upside. We're at 457. I'd say 30 points, 34 points is good, but it's got to get rid. It's got to go right above this Chapman wave, right there, falling axe formation, the resistance line. Look, there it is. That's just an expanding triangle. It's got to go nicely above that to even be able to tackle the left side high in the 470s. Oh, it's a big ask right now. And the 9-period moving average is moving up sharply, but it hasn't crossed green. Hasn't crossed the black 14-period moving average, but the MACD is very close to doing that. IWM is the one that was leading, and now it's kind of struggling. It's up $1.09 at 205.67. Yeah, it's still going. I should have mentioned we are long this, but it needs a lot more. I want to see the small caps really participate and then lead. They did participate, and now they're stalling. I don't like the stall. Then we're going to be looking at the SMHs, semiconductors. Look at the semiconductor leg B, strong leg B, still gray. I'll change it now. Look, gray. Gray means I haven't got a buy mode, okay? And right there. But it's now over the 14-period moving average, which is a good sign. But that pink 9-period moving average has a long way to go to be positive. I think the semiconductors are going to struggle for a bit. If you go to NVIDIA, look, NVIDIA is up 5 at 114.21. Yes, very nice action. But when you think it was at 140.76 June the 20th, and it slumped down to the, did I forget to type that in, to 90.69 on the 5th of August. 90.69. Yeah, that's this is a nice rally, but you want to see a lot more. But it is moving. It's participating. In a way, it's leading because it's up 4.8%. That's a very good sign. I'm still a gray leg A, but the stochastic is much better than the others at 47%. But look at the way the on-balance volume is dying. There is no volume there. There needs to be volume. But the weekly chart, the 9-period moving average is still positive. Okay. Well, we've got a break coming up. Before we do anything else, I just want to go to the TLT because that's important. TLT trading right now. I can get to it in time. TLT. Yeah, it's running. It's up 55 at 97.17. It needs to get to 98.60 to say, hey, yields are already going to come down sharply. Hasn't done that yet. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, so I thought I'd just get you some questions right away. Z scalar, ZS is the symbol, trading at 175.95 or 3.25. This is a grade leg B. I'm not going to have time to change that right now. But most importantly, look at this beautiful arch formation that is now forming a cup formation. So this is one of the techniques that I've discussed in great deal in many of my webinars. Let me just see if I can show you this right now. Look, I always look at the price movement as straight up, straight down, cup formation or arch formation. Those are the three core patterns that I look at. You can mix 1 and 2 and 1 and 3. 1 and 3 is where it forms an H pattern. It looks like a lowercase h, and how it handles the left side low is very important. If it doesn't take it out and starts to move higher, if it closes, especially if it closes above the arch high for 2 out of 3 sessions, that means you've got a cup formation that can go all the way back to the left side high, or at least to a major peak on the left side. In this particular instance, it did exactly that. 155.25 was the low back in May, and then it bounces, goes to peak C. It's still a peak C because it didn't take out the 155.25 low. It went to 155.97, and it's starting to rally. So you go one step at a time. The series of moving averages right here at 180 to 183, that's your big resistance. If it goes above that, it could be a slow process. Usually the move back is quite quick, but we'll see what happens. But if it can close anytime in the next 6 weeks, 2 out of 3 weeks above 208.14, that's the high of the week of the 19th of July, that's going to be really impressive. I would say right now, just go one step at a time. 173 to 171 is key support. It's a 176.20. And if it's able to get to 170, it really needs 179 to 160, or 179 to 180 in the next, I'd say even give it 3 to 5 sessions. If we can do that, that's going to be very impressive. So yes, at this particular point, I treat it as a work in progress, meaning that the 9-period moving average in the day is still pink. It needs to move to green. And then as soon as it does that, if it's able at any point going into September, hold in the 181 area, then your focus could just start to be the 200-period moving average of 184. but it has a lot of work to do first because that weekly chart has 180 to 183 as the moving averages that are still pink, and those are the ones that you're going to look at. So I hope that helps you. Next question came in as, could I look at Amazon? No position. Just want you to know about it. So 168.55. Let's say okay. So this is gray A. I haven't even got a plus. I've got a trough E, but I haven't been able. I've got a plus, a red plus, but I haven't got an up arrow. So that says A, peak A, gray B, just a modest B right there. I would say Amazon's a work in progress. I think it's going to struggle for a while. It's got a huge gap to fill. It's trading at 167.66, up 88 cents. There's just so much in the way of resistance. I would say I don't think I would short it because it's had this huge gap to the downside, and now it's just for the first 2 days now. Is that correct? Yeah, the higher from the gap was on the second. The high is 168.77, 168.55, 168.55, 169.16. Today's the first day it's even got into the gap. So that's important. But I would just say I wouldn't want to be a buyer. This is my own opinion. A buyer of Amazon on the shorter term. The monthly chart is still holding really well. Weekly charts got an S, meaning the 9-period moving average is weak. So I'm just going to say I don't see anything right now other than maybe a little bit of a bounce, but I don't see it as a short. It's just stuck. It's in a range. So I hope that I haven't helped you. All I can say is that if you're asking if I would go long or go short, I'd probably just say I'm stepping aside. I don't have any conviction other than to say it's really struggling to get into the gap, and 169 to 171, let's call it 172, are the moving averages that are going to be strong resistance. So that's Amazon right now. Next question, I don't think it was a question, RCL, Royal Cruise Lines. Yeah, this is a tough one because Royal Caribbean Cruises had a spectacular move. And look at the monthly chart. It goes from the 30 area all the way to the most recent high, the little double top. Was that it? Oh, that went to a G. Went to a peak G at 173.37. It's trading right now at 152.55, down $1.31. Here, if you're looking, would I go short, would I go long? The weekly chart says hold long positions because it's holding very well. On a very short-term trading position, I'd say it's a little bit vulnerable to a pullback. It doesn't have to be deep, but at 152.47, I think it could dip to 149 in the very short term. And if it takes that out, that's a problem. But I think it just dip, and I think it's going to have trouble getting to this next leg up, which would be leg B in the daily chart if it can go over the 9th of August high, which is 139.08. And it's trading at 139, did I say? 59, 159. And it's trading at 152.54. Yeah, this one also is kind of stuck it at a spectacular run from the 130.08 low on the 5th of August to 158.08 high 3 days ago. 3 sessions ago, I should say. Yeah, it's filling that gap, and the 9-period moving average is deflecting lower. So I hope that helps you. Next thing was Fletch put this bigger XOM. So this is ExxonMobil. Had a really nice rally. It keeps having these spikes. It's almost like Bart Simpson hairstyle, that big spiky hairstyle. And did it go to a C? Yes, it did. It actually went to a peak C yesterday, leg C, I should say, because we don't know if it's going to be a peak because the day's young. Yeah, this is making – I spoke about this yesterday. I said or maybe it was Friday. I said, I see Exxon holding really well, ExxonMobil. It's a dividend stock, plus it's a capital gainer because it keeps wanting to go to all-time highs. But I would say that it's in this choppy sideways with slightly higher highs and slightly higher lows. So it is positive. As yet, I don't see a big break to the upside. At some point in August going into September, if ExxonMobil spikes into the 123, 120, 124 area, that's a breakout. And I think at that point you can have a bigger spike. Right now, it's just in this very choppy sideways rectangle formation. The big high that was made at peak B in the weekly chart before it started stalling, and now it's actually in leg C. Below that was at 123.75. So I see it in this choppy area, holding very well, kind of suspect to not holding gains for very long, but it does have the gains. So yes, it's holding well. I think as a dividend stock, it's participating very well in that kind of media. I'll be right back. Now it's at 114, and I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. I had a question about Vermilion Energy. VET is the symbol, and I got upset because I think that VET should have been for a vet, some kind of animal, something or other stock. They have usurped that. So it's oil and gas exploration. Okay. So it's Canadian. It's trading at 10.09, down 13 cents. This is another one that's in gray leg B at this particular point. The MACD, though, is turned up. So the relative strength is good. Stochastic's much better, 56%. On balance volumes even rallying. So this is a little bit more room to go. But the chart pattern says, wow, this is A, B failing. Yeah, the chart pattern says there's a lot of work to be done. Now, if you're long VET, let's just say in the 9s and it's trading at 10.08, that's one thing. But if you're looking to enter it, I would use a tiptoe method. I would start my position right here at 10.08. Yes, oil and gas, it's just, UNG, finally UNG is moving to the upside. If I can type it in the right place. Look at this, UNG, there it is. A nice move, it's in the gray leg B. It hasn't had a leg B forever. UNG made a really good rally into the 21s back in May, and then made a double top in June, and then plummeted from the 20s down to the recent 12s, and now it's trading at 14.60. So yeah, you got some signs that things are working out much better. Crude oil has had a very nice bounce, more than a bounce actually, above the resistance line. So I'm just going to go back and say that VET, I would start my position here, especially since Peaky, you are a long-term buy and hold. I would not disregard the fact that if it closes under 950, it could stay down in this lower range for quite a while. But holding, the 9-period moving average hasn't gone positive, but at 10.08, I would give it about a week. And I'd say within the week, if it's able to get to the top part of this ugly candle of the 1st of August with a high of 1058 and a low of 983, if we can get anywhere into the upper part, let's call it 10.40s, that's a very good sign. It's a V-shape formation from a low. It's going to help the weekly chart, but it's a step-by-step movement, and there's some really great news about gas and natural gas and crude oil. This might just be stuck in a range, but definitely at 10.07, 10.08, I'd start a position, but I would only start the position. Let's talk again. If you're in the position and it gets to 10.40 in the next week, then it's something that's kind of impressive. So A2B in the den. Yeah, I follow packaging core forever. When I say forever, I mean for decades. I remember one Thanksgiving, I had a friend who was in the staples business, and he was talking about staples, and I said to him, Sam, I said, how things going? And he said, oh yeah, the staples, I always know what the economy's doing because people either are buying staples or they're not. This is staples mostly for the housing market, but it was for packaging as well. He had developed a different process and became one of the leading producers of this particular type of staple. And then at the same time, I remember exactly where I was standing when I said to him, what do you think? Don't you think packaging does the same thing, like a packaging core? So this goes back. Let me just see if I can squeeze this close and see where it goes back to. Oh, I'm talking about a long time ago. 2001. Huh. So it must have been, it must have been back in the early 2000s. And it was rallying, but I think something changed because maybe it wasn't packaging company. It was a packaging company, and I'm sure that the symbol was PKG. But anyway, I used that because I'd followed back in the 90s as well. It's just, packaging, that packaging, if the packaging company is doing well, means the economy is probably doing well. They go hand in hand. So anyway, Packaging Corporation, I've got it as a daily peak. It could be an alternate count, G/C, but I think it's a peak C. because the same thing in the weekly chart, I could give it an alternate count. Everything says, why not keep it as a peak C? MACD is good, stochastic is good, 914 is good, and a leg D in the monthly chart. So I'm watching this closely now. In the third week of September, if Packaging Corporation, which is trading at 192 right now, can break into a new high, and that high would be above this peak C that was made at 201.74 on the 31st of July. It's been some time now, and it hasn't broken to a new high. If it's able to get to 205 anytime, I say third week of September, I'd say anytime in September, but I'm thinking third week by the speed with which you get the rallies and the pullbacks. If that occurs, that's going to be really bullish, both for the market and certainly as I think as a good sign for the economy. A question came in here about, where did it go to? Another one. Would you ever consider? Oh, would I consider 722 a phantom peak? What are we talking about? Which month? On the July the 22nd. So let me go here. July 24. Oh, so I'm talking to Dan about this. I've done this periodically, just once in a while. No, it's like my rule of thumb says never do it. But there's an alternative subsidiary that says every once in a while, it seems so obvious that you have to use it. And let me explain what it is. Let me open this up so you can see very well. The question became, can I use this peak A right here in Packaging Corporation America, PKG, this high of 194.42 on the 18th, had a lower high, so it became a peak A, but then the next day was 194.41. Now, once in a while, when it's this close, I tend not to use it, but just, I'm trying to think, I think I even wrote it down if I could find it here. Oh, man. I'll maybe during one of the breaks, I'll see. I know I wrote it down because I said, this is a great example for those people who use Chapman methodology to know what the alternate counts can be. And so I'm just going to say to you, I would have said you could make this, I would then make, what was the stock? I can actually picture myself typing it in. And I wrote it down. So I would have said I could use this as a phantom peak right here. In other words, it isn't official to make that a B. But then what I would do is I'd make it red, I'd change the color or just make it so that it's obvious that it's not real. And that becomes the C, it becomes a D. And this becomes a dreaded H pattern. Oh, it's worth talking about. I'll be right back. Basil Chapman, Technicians Hour.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me just do this. I'm going to say it's rare, but if you understand the process, that the 9-period moving average is the king here, and that right at this particular moment, Packaging Corporation of America, the 9-period is almost close to going pink, but it hasn't yet. MACD's weak, stochastics weak, on-balance volumes weak, relative strength is weak. That makes sense to say that, you know what, if I'm long, I'm going to look at this as taking some money off and putting a stop in place to protect myself. But I don't believe I can do that for the weekly chart. It is still a peak C. I can't have this as an alternate G/C at this particular moment, and it's a leg D in the monthly chart. So yes, that would work, but you've got to identify it. You've got to say, this is the process. I've got a sub-plan that is an alternate count that is secondary or tertiary to everything else that I do. I know what I'm doing. I'm saying this could be a D, therefore I'm taking some precaution. Now, would it be a short at this particular point? With that weekly chart still so strong, I don't see anything other than the retest of the 190 low. So I don't see it as short. No, I think this is still a work in progress to the upside. Okay, and if I'm thinking that there's still another big part of the bull market to come in 2024 based on my monthly chart patterns, Packaging Corporation should be right there. Okay, same. So I don't want to take time now because tomorrow maybe I'll look at Cintas and all those other stocks that we look at. Question came in about FSLR. Oh, yeah, that was appropriate. Cultural appropriation with VET. Yeah, no, but that's not true because it is fossil fuel. So I don't see any reason why Vermilion Energy, oil and natural gas exploration, if it's got the word fossil in, I guess they can use the symbol VET. Okay, with that said, let's go to fossil. No, FSLR, which really should be the fossil, but it's not. It is, this is First Solar Inc. up in strong leg B in the daily chart. I've always had this notated because it's something I follow. I even have it in my list for subscribers in our watch list, but I haven't done anything with it. I don't think we've ever had, even though I've followed it so closely and it's had some really spectacular gains, I haven't done anything. So this is D, that's E. I'm calling this for now an F. It really should be a brand new B, but it's a 9-period moving average, didn't go negative, so I'm calling it a continuation. And just so that I know what I'm doing, I put a B. It's not a big deal. F/B. F says, oh, man, be a little careful. B says, are you kidding? I want to buy every single dip. So this is First Solar Inc. And I would not be surprised, Solar Inc., if this is telling us that we should not be ruling out the whole solar thing. I mean, especially when you've got energy, especially when you've got, battery operation is something different to the solar energy that you're looking at for usage in buildings. But at the same time, certainly it can't be ruled out as being really important to the whole generic aspect of, there we are, of the energy world, because we absolutely should be looking at alternatives. That just makes it's just so important. Whatever you do, you should always be looking to say, hey, is this the only thing? No, if there's an alternative, you need to be looking at alternates. So this is A to B. So I'm going to say, I'm just going to squeeze this a little bit in the daily chart because I like to get a perspective. It looks great when you're looking at the short term and everything's there. See, that gives you a different percent. That just says, hey, you hit the 200-period moving average, which is a fantastic support. Wow, I have to talk about this. Sometimes I need to embarrass myself. What can I do? It's just the way it is. Look, the 200-period moving average, how important is it? I had all the work done before. I did the Chapman wave. I'm going to get rid of the fib right now for this particular thing right now. There are. Okay. I drawn in my arch formation that can give you a 1-to-1 to the downside. There it is. Perfect. What was the level that I was looking for? I was looking for in the E-mini of 53.70, right? What's the 200-period moving average? Right there. It was just a fraction below that. So what happens? We get the 1-to-1 to the downside. Price goes all the way to 53.70.25. This is the E-mini. I go long at 74, and based on the 1-minute chart, everything's going nicely. And then for some reason, I don't know what it was. I was busy. I was really doing my newsletter, and I don't like to be distracted. I said, I'm just going to get out of this. I think I've got the low, but I didn't. I got out, and look what happened. It went from 74 to where it is right now, 54.21. And I'm just looking at this saying, wow. And that's all I can say. Wow. All right. So and I had an alternate count, and I say to you, it's an alternate count, but so often with the alternate count, I would say, I'm just guessing, maybe 85% of the time, the alternate count, I'd say even 90% of the time, actually does go to the D. So even in that, what we were looking at before, Dan, was it packaging? That could still go to higher highs. So I'm looking at this and I'm saying, yeah, comes your D. So the original A, B, C, instead of getting fussy and making some kind of fancy alternate count, we're going to get a D. We're going to get a D above the high of the day, which is 54.23.00. And I suspect we're going to do that in the next hour. All right. So with that said, let's go to the question that I had. I wrote it down. Oh, yes. Could you discuss the difference that you saw between the gold price and the GDX? So here's the GDX. The GDX is a nice candle today in the Chapman Wave Inside Track repellent zone, 37.24, up 34 cents in a leg B. Now, I should make this a gray leg B because that's what it is. It hasn't got the confirmation yet, but I'm so close to thinking that this is going to be a move that goes towards the 38s, because at 37.8. Whereas looking at the gold chart itself, the gold chart, You see this same trend line? These two lines that make the inside track repellent zone? The angle varies. Let's see. Look at the angle of the GDX. Wow. Let's say 45%. That's a sharp angle. So there is a difference in the charts, yes.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, I'm not sure what the question was at 90. So with the Chapman wave, this is a gray B in the GDX. But it is running nicely. The 9-period moving average above the 14-period moving average in the weekly chart says, hey, this is still acting really well. So gold is well. We're trying to add a gold stock. We missed it today, but it's going to be there. I kind of like what's going on. And of course, you've got the whole Middle East thing, so you never know. Gold is always in play if that's the case. Gold to silver ratio. I don't know what the silver ratio is. We used to have someone in the den who used to do that all the time. So let me just show you something. In the den, we've got A to B talking about swim. I've got my screamer list. Swim's been up there for a couple of days. Big move. This is Latham Group designs and builds swimming pools. 5.62 up 21 cents today. Just a single move, gaps up and keeps going. Another one is SKE. SKE is trading at, these are stocks under $10, $7.33. I was wondering where I should include a Skeena Resources Exploration Company Canada. Whoa, maybe this goes with VET. Another one is AIG. This is a gold stock. AIG is IM Gold. Corporation, look at that big move up to 481, up 9 cents today. A bunch of them. Oh, OpFi. I had to look up what this is. This sounds attractive to me. It is OpFi, credit for overlooked individuals, installment loan products. So these are the ones that I have in my screamer list. Because we've had a bunch of pretty good successes with our stocks, I've now gone back to adding some low-price single-digit stocks. We had one which we actually doubled up on, which is doing very nicely. So these are going to come back. So now that we've got some cash in the bank, I'm able to say, hey, let's go for the single-digit stocks. Let's see if we can have another little category in our portfolio of single-digit stocks that can give nice percentage gains. So I'm going to wrap it up, hand you over to Steve Rhodes and all the great programming here at TFNN. Check out my opening call, and I will see you later on.